Bitcoin is tanking. Everyone's panicking. The markets are red. Confidence is dropping and people think the bull run is over. And they might be right. But what's happening isn't random. It's part of the macro cycle. And if you understand liquidity, this correction makes perfect sense. Let's have a quick look at stocks. Yeah, stocks, not just crypto. Everything has been dropping, but it's not that bad still. We're currently in a transition phase between QT and QE, quantitative tightening and quantitative easing. This is the Federal Reserve balance sheet, and you can see it's been in a downward trend since 2022. And in that time, this time of QT, quantitative tightening, the markets have rallied. And now we're going into a phase of quantitative easing where they're going to print more money. The problem at the moment is the part we're in now, historically, this is the ugliest part of the cycle. Volatility goes up and risk assets bleed, and that makes the markets feel unstable. And so for me, yeah, this is a crash. It probably will go lower. This red line here is my Gandalf line on Bitcoin. If it breaks this, then I'll probably be even more worried. But it might just be a flash crash. When you understand markets, they don't run on hopes or narratives. They run on liquidity. Think of it from a personal point of view. If you have 100 grand in the bank and you buy 50 grams worth of gold, you buy 25 grams worth of silver, and you buy 25 grams worth of stocks, you want to buy Bitcoin, but you don't have any more money. So what do? You either rotate that money, sell some of your gold, sell some of your silver, and then you put that into crypto, or you just make more money. And that's the situation we're in now. Everything has pumped and everything seems to be double topping, especially gold and silver. Now the liquidity has been drying up because the Feds haven't been printing. Most of the pumps we've seen so far haven't come from new money. They come from the reverse repos getting drained. I've been going on about this chart for years, since 2022. And I said, look, once this starts falling down, that's when the markets are going to start pumping up. And right now, it's on the floor. This has been probably one of the only liquidity sources of this market right now for the last few years. And that money is pretty much gone. And without QE, without money printing, then there's nothing the markets can really do. There's no more money to play with. Again, going back to my personal example, if you have 100 grand and you've already got 100 grams worth of assets and you want to buy more, what do? You either rotate or you make more money. On paper, the Fed has ended QT, but they haven't actually begun stimulus yet. So we're in a gap where QT is slowing, QE hasn't started, and liquidity is tight, and fear is accelerating. This is when the markets pull back hard, especially overvalued tech and speculative assets. Now I want to quickly come back to this. I talked about this, I think it's last week. He said something important. He said, the Fed has never stimulated into a bubble before. Normally QE happens after a crash. This time QE may begin before the dust settles. That's how you get a blow off top. There's a few different scenarios that could play out. In the short term, there probably is going to be more volatility, more fear, more liquidations, more red candles. December onwards, that's when there is going to be a shift into QE. So the narrative that could play out is that the markets could crash in the interim. Even this month, the whole of November, it might just be red. And we could go down to lower levels than we haven't seen in a long time. I'm not saying it will, but it's possible. And then the QE gloves are off in December, and then the Fed can come in and save the day and be like, okay, look, the economy's tanking, we need to print more money, let's print. That could play out. It could play out over the next couple of months, or that could take 3 to 4 months to play out. I'm leaning towards the more longer time frame, but who knows? And the problem with liquidity, the reason why I'm saying that is, it doesn't go into crypto first. It normally goes into bonds, stocks, tech, speculative assets, and then Bitcoin and alts. So for me, nothing is broken. This is a part of the cycle where you're either a long-term investor and you can ride it out, or you just panic and sell. The macro hasn't changed. If anything, the conditions for a blow off top are getting stronger. So while everyone is reacting emotionally, watch liquidity. QE will come, and when it does, Bitcoin and crypto won't just recover, they'll accelerate. So stay patient, watch the macro, and don't confuse the shakeout with the end of a cycle. because if you zoom out, it's still not too bad. You know, we're still in an uptrend, just about. But let's see what happens.